And I want you to just talk us through that yield curve last week. And we're going to see the market trade within a much narrower range than we used to see maybe 2 months ago when we saw that, that flurry of interest in Nigeria's bonds.
Yes, but last week, I think recently the weighting of bonds on the index has increased slightly. You know, they're being bought in tranches between now and December. So I think right now we're at 0.48%, and it has reflected in the bond yields. They're trending the top 12s, the lower 13s, maybe 13 points. The highest bond we have, and that's one of the ones not on the index, is about 13.9, 13.8, but generally bond yields are trending 12.5, 12.8, sub 13% for most of the bonds.
All right, and how do you assess that foreign investor appetite for bonds, though? Do you think that it's thinning out? And in fact, I think some people are making a case for the treasury bills, because on the OMO auctions, you can get yields as high as 14%.
Yeah, that's a trend we've seen. We didn't have an OMO auction today, but for the last one, the stop rate was 14.01. So yes, generally you can get a higher rate, and then the tenor is much shorter. We're talking about tenors below 91 days. But again, it depends on the investment goals and investment horizon. We think there's still interest in both. There's still interest in the bonds, of course, and then for the shorter end of the market, there's interest in the treasury bills too.
All right, let's weigh the recent Naira stability and the oil price. Of course, the oil price seems to be coming down a little bit these days. Of course, whenever it does, some investors begin to get worried. Your thoughts on how foreign investors are weighing the Naira right now and their appetite for risk in Nigeria's bond market?
Well, there are two things. Yes, maybe oil prices are depressed a bit, but if you look at the year-to-date trend, demand has been very soft, and we have our external reserves at highs of more than 3 years, if I'm not mistaken.
Right.
So that's very comforting. The fact that we've built up our reserves above $42 billion, and central bank is also quite relaxed about in terms of the demand. We're looking at below 100 million. In fact, I think below 50 million. Last week we had the lowest ever demand we've had in maybe 2 years. So the demand is really soft. The interbank market also at some points is even cheaper than from the central bank. So there aren't that many fears. I mean, it's not, we would need sustained low prices in oil before there'd be any effect in terms of reserves or in terms of stability of the FX. But on the fixed income side, I think the yields are still attractive to foreign investors.
All right, I guess it's early, but let's talk about the Monetary Policy Committee meeting that we should expect in a few weeks. How do you think the bond market is positioning for this? Of course, some people say that there's so much liquidity in the banking sector that might be a case for some tightening. But on the other hand, I think the rhetoric and the signals we've gotten from the authorities, I think including the central bank, is that they want to keep rates low. So your thoughts on what is likely to happen in the next few weeks?
Well, there have been quite some conflicting views. Some people think there might be a little bit of a cut in interest rates. Some people think we'll just stay at these levels to the end of the year. And so far, if you look at the way it has worked, the monetary policy has worked very well. The Naira has been stable. Interest rates have maybe declined about 300 basis points from their highs. So in terms of interest repayments for government, they're not overburdened in terms of the interest rate. I mean, it's not as high as 16 anymore, yet it still remains attractive for foreign investors. We have the foreign exchange where we want it to be a very stable Naira. So it's likely that the Monetary Policy Committee, sticking my neck out on this one, will just keep rates exactly where they are and see out the end of 2012.
I think many people that I've spoken to certainly agree with that sentiment. Clearly, there are several things to weigh in that monetary policy decision. Okay, let's talk a bit about where the Naira is. I want to come back to the Naira because it's so key, it's so crucial. Where do you think the Naira would end the year? I mean, it's currently, I think, just under 157 to the dollar in the interbank. Yeah. Your thoughts on where it may end the year?
Well, it has spent the last 6 weeks at those levels. We'd had about 3 weeks of 157, 20, 30, very stable from the beginning of October to about the third week, and then we saw some appreciation. And if you look at the import cycle, this November tends to be the last month when we should be seeing a spike in imports, because by December, the middle of December, a lot of companies have closed down for the year. Right. So if the spike month, we're seeing a mild appreciation and soft demand in the month when we should be seeing a spike, it doesn't look like the Naira will come under any significant pressure towards the end of the year.
So you think it'll be about 157 come year end, or
maybe it will even be a bit stronger than 157,
maybe 156,
because there are
perhaps
year-end inflows. You know, towards the end of the year, you have some diaspora inflows as well, which normally give support to the Naira anyway. So, I mean, taking those factors into consideration, it should end about these levels, maybe slightly, maybe marginally stronger, depending.